most people don't really know how the bond market works and how that affects interest rates. So bonds are traded every day on the stock market, well, on the bond market rather, Wall Street, just like Amazon, Apple, any of those stocks are. And so they've got a price every day. One of the things that we do is we watch the bond market. So usually I'm looking at it on a quarterly basis right here. And what people, the higher the price of the bond, the lower the interest rates get. So let's look at it this way. It's like buying a gas card. So let's say you could buy a gas card today for 40 gallons worth of gas, and that's going to cost you $100. So we've got our 40 gallons of gas that we're going to pay $100 for. And so that works out to be $2.50 per gallon, right? So now here's the rub. It's a bond, so it's not going to mature. We can't use it for 1 year. So 1 year from today. So of course the first thing we're going to ask is, what's the price of gas today to determine if this is a good deal? And the second question is do we expect prices to go up, meaning there's inflation, or do we expect them to go down? So let's assume that we expect the price of gas to go up. And when we're looking at this, we've got 40 gallons of gas, but we assume it's going to be $3 per gallon 1 year from now. So that means that this bond is actually worth $120 1 year from today, which means if we're investing, we may decide, you know what, I'm willing to pay a little bit more for this gift card that I can't use for a year from now, which raises the price and it lowers the yield on that. Now, the other way to look at this is to say, all right, well, what happens if the price goes down to $2? So let's say the price goes down to $2. That means that the value of this bond a year from now is going to be $80, but we're not sure exactly where it's going to be. And we're negotiating. It's on the marketplace. These are open for bid. So we offer $90. So here's the price and here's the yield. And we say, all right, I'm going to offer $90 for this card, which increases the yield. That increases the interest rates. So we're looking at this on a daily basis, and we want to see which direction the price of the Fannie Mae 30-year coupon is. So that'll tell us the higher we go on this chart, the lower interest rates are.